Good day. This is your European Open briefing for Friday, 5th of August. My name is Michael Florentiades, and these are the key points you should know about today. The pound held 131 versus the US dollar following the Bank of England's surprise stimulus measures. The dollar is mixed right now. It's mainly waiting for the US employment report later in the day. The Aussie is challenging its 3-month high versus the US dollar today. And on the calendar we had German industrial orders, Halifax house prices from the UK, US jobs and trade are coming out later together with Canadian jobs. So starting with the pound, you see the big drop from around 133.2040 to the 131 level, but we should say that the 131 level more or less held. The Bank of England cut 25 basis points as expected, but it also restarted its QE program, which was not so expected. It will buy corporate bonds in the tune of 10 billion pounds and government bonds in the tune of 60 billion pounds. It will also use a 100 billion pounds term funding facility to lend to banks at low interest rates in order for the banks to pass the lower interest rate benefit to households. Rates will probably be cut again according to the Bank of England, close to zero, but no negative rates from the Bank of England. Now, for the moment, I think that this is quite bad news from the pound. The one thing that is supportive of the pound is the positioning that we have too many speculative shorts. So I think this might be something. So if you don't see the pound, falling off a cliff after this, I think the excessive short positioning is going to help it to have less damage maybe than expected. But we'll see, because this is the market is still digesting this development. Now, the dollar, we said it was rallying the previous past couple of days, but we see that the dollar's rally has fizzled out. We see the dollar index making a top more or less at 95.8. Now it's closer to 95.6. The key levels 111.12, 111.20 for euro dollar. That was the low that the dollar achieved, and dollar yen was also pushed back towards 101. So dollar was really unable to make a lot of headway against the yen. It was up to around 101.5, but now around the 101 level still again. What's happening there? I think the dollar bulls are staying away, and they're waiting for news from the jobs report before they recommit or before they push the US dollar higher. There have been a few negative surprises, both from the Fed, from the GDP report a week ago, so maybe they're a little reluctant to fall into the trap of underestimating another perhaps negative surprise. We will see what the jobs report has to say. Today we're expecting a fairly healthy jobs report, 180,000 jobs expected, and the unemployment rate to drop to 4.8% from 4.9%. On to the Aussie. It has surprised some analysts by challenging its 3-month highs versus the US dollar, despite a rate cut earlier this week and an inflation outlook from the Reserve Bank that will probably allow for more cuts in the future. They say that the recovery in iron ore prices during the summer has helped the Aussie, as well as probably as the running of some stops of shorts. There were maybe a lot of people short the Aussie, and as the pair was rising, they had to cover those bets. But we expect RBA job owning about the exchange rate to start again as the pair reaches or crosses the 77 or 78 US cent level. So that will be definitely interesting to watch. On to today's calendar, we had disappointing German industrial orders for June, and also disappointment from Halifax house prices. They had a worse than expected drop month on month, but both of these indices did not have much of an impact. And all eyes, of course, will be on the US jobs report and also the US international trade and the Canadian employment survey. So that's all from me today. Thank you very much for watching and have a great day.